Good afternoon, everybody. Happy Friday from a cloudy and somewhat gusty Gloucester. Let's hop straight into the five biggest economic developments in our view for the week. US jolts declined sharply to 8.83 million, down from expectations of around about low nines. This was quite a contrast to expectations, and it just shows that even though the US labour market has been one of the strongest parts of the global economic landscape, we're actually starting to see the impact of inflation start to move through into the labour market. US consumer confidence slumped to 106.1. This was down from 114 from the prior month. This was a bit of a shock to markets that had anticipated a rise in consumer confidence to 116. Again, it demonstrates that the impact of higher inflation is starting to flow through to households and consumers. Australian CPI year on year fell, but it still had an annualized rate of 4.9%. This was down from the July reading of 5.4% for the prior 12 months. Again, we're getting this data, which is generally starting to show that inflation has and is working its way through economies, and it is starting to be felt all over the place. This really confirms that the RBA more than likely will continue with their wait and see approach on inflation. US GDP quarter on quarter fell to an annualized rate of 2.1%. This has continued to decline and slow as, again, similar theme, the impact of interest rates is starting to seep through to the broader economy. The last one is Chinese manufacturing PMI marginally rose to 49.7. Although this is still in contraction, it was better than the prior month's reading of 49.1. The Chinese economy has been contracting as of late, and it has compelled over the last couple of weeks the PBOC to take some action to provide some type of stimulus to get their economy back on track due to the lackluster consumer demand. Here we can see a vast coverage of futures markets that we trade, and a lot of these we trade in our multi-strategy hedge fund. You can see for the course of the week that cocoa, natural gas, crude all had reasonable weeks. The VIX was down a lot over the course of the last week as equity markets have rallied. The Australian share market has had a mildly positive week with it rising. However, a lot of the money flow, as you can see here, is in the largest businesses that are listed on the ASX. The big four banks, CBA, NAB, Westpac, and ANZ all had very, very good performance. BHP, Rio were also up. Fortescue down on the week after they reported earlier in the week. Outside of that, Westies and Woolies have had some strong performance as well, but generally just a very, very green week across the board after the Aussie market was absolutely hammered over the prior 2 weeks. Outside of that, you have the Frame Funds Trend Barometer, which you can see is a continuation of the last couple of weeks' theme, where it's just really tracking sideways and we aren't seeing any definitive short or long-term trends develop. Outside of that, hope you have a great weekend and a good end to the week, and we will speak again next week.